Welcome back to Investing Talk podcast.
Great to be here.
Today we're taking a close look at Grab Holdings, the Southeast Asian super app.
Yes, Grab. We've got a stock analysis from May 2025, some recent news, and a due diligence report you sent over.
That's right.
All aimed at figuring out, where Grab stands now and maybe where it's headed.
Our mission today really is to unpack all this so you come away with a clearer picture, understand what's driving Grab's performance, and what key things you need to watch.
Makes sense.
So first up, maybe a quick overview. What exactly is Grab?
Well, fundamentally, Grab is this super app, right?
Right.
Operating across 8 different countries in Southeast Asia.
8 countries. Wow.
Yeah. Think of it like a one-stop shop on your phone. Instead of juggling apps for rides, food, groceries, even financial stuff like insurance,
Grab wants to be the single platform.
that's the idea. They offer Grab Food, GrabMart for deliveries, Grab Insure for insurance products, and they even have Grab ads for businesses.
So it's definitely way more than just catching a ride. How does a company like that with so many different, arms actually generate revenue?
Good question. Primarily, it's through commissions. They take a percentage of the transactions happening on their platform, the rides, the food orders, etc.
Okay.
They also have some subscription models, and advertising brings in revenue too. Companies paying to get seen within the app.
Got it. That gives us a good baseline. Now let's pivot to recent performance. That first quarter of 2025 sounds like there was some interesting developments.
Oh, definitely. The Q1 2025 numbers were quite something. Revenue was up 18% compared to last year, hitting $773 million.
18%, not bad.
And their on-demand gross merchandise value, that's the GMV, climbed 16% to $4.9 billion.
Those are pretty solid growth figures, but I heard the real headline was profitability. Is that right?
That's the big one. Grab actually posted a net income of $10 million for the quarter.
10 million. After quite a while of losses, presumably.
Exactly. Compare that to the same quarter last year, it's a $125 million improvement, a huge swing.
Okay.
And on top of that, their adjusted EBITDA hit a record high, $106 million. That's a $44 million year-over-year improvement.
So this shift towards profit, even if it's just $10 million, it feels significant, a potential turning point.
It really could be. The key question for you as an observer is whether this is sustainable. Was it just good cost control this quarter, or is it something more fundamental? We'll need to watch the next few earnings calls closely.
That makes sense. What about cash flow? Beyond just the net income figure, how's their financial health looking?
Well, their operating cash flow over the last 12 months is strong, $936 million.
Okay, that's substantial.
It is. Now, it's worth noting the earnings release didn't detail their debt levels, which is, something to keep an eye on. But that strong cash flow certainly helps.
Right. So overall, it sounds like a pretty positive quarter then. These numbers seem to back up some of the company's underlying strengths. Let's talk about those strengths. What's driving this?
Well, the reports highlight a few key things. They saw record user growth in Q1.
More people using the app?
Yes. And their partner network, think drivers and merchants, that's expanding too. GMV from that segment grew 17%.
Okay.
And then, of course, there's the big one, hitting profitability for the first time. That's a major psychological and financial milestone.
It absolutely is. But on that user growth, are these active users, engaged users? Do we know anything about the cost to acquire them? Is that growth actually sustainable long term?
That's a really crucial point, and honestly, the provided reports don't dig into those specifics, engagement metrics, customer acquisition costs. So while the top-line user growth looks good, you're right to question the quality and loyalty behind it. That's definitely a factor for you to consider when thinking about sustained profitability.
Okay. But can't all be positive news, right? Every company has risks. What are the potential downsides or headwinds for Grab?
Definitely. One obvious risk is just how much they rely on Southeast Asia.
Right, geographically concentrated.
Exactly. Any big economic downturns or, political instability in the region could hit them hard.
Sure.
And as we touched on, there wasn't really any specific guidance about whether these improved profit margins are here to stay. How sustainable is that profitability?
Yeah.
That's still a bit of an unknown.
Okay. So growth, profitability improving, but concentration risk and questions about margin sustainability. Given that backdrop, who are they actually fighting against in these markets? Who are the main competitors?
It's a competitive space for sure. In Indonesia, their biggest market, you've got GoTo Group. Very strong local player, big ecosystem, Big in payments, too.
Go to. Okay.
Then there's Food Panda, which is active across Asia. They really specialize in delivery and sometimes compete by offering lower commission rates to restaurants.
Focus competitor.
Right. And in Malaysia, you have the AirAsia Super App. They leverage their airline business and often use pretty aggressive pricing.
Interesting mix. So with players like GoTo, Food Panda, AirAsia,
Huh.
how does Grab stand out? What's their edge?
Grab's main play is that multi-service bundling we talked about. The super app strategy.
The ecosystem.
Yeah. For you, the user, it's convenient. Order food, book a ride, maybe even pay with GrabPay, all in one place. That integration, that potential for locking users in, is powerful.
It creates stickiness.
It does. But they still face pressure from those niche players who might do one specific thing really, really well in a certain market.
We mentioned financial services earlier. How big a deal is that part of the business becoming? Is it just an add-on, or could it be a major future driver?
It seems to be growing quite significantly. The reports showed 36% year-over-year growth in financial services revenue, reaching $75 million in Q1.
36% growth is not trivial.
Not at all. And Morningstar, in a previous analysis, had projected strong GMV growth for Grab overall through 2028. A lot of that potential could come from expanding these newer areas like financial services.
So diversification beyond just rides and food.
Exactly. It could be really important for their future valuation and resilience.
Looking forward then, what are the key catalysts or potential hurdles we should be watching for Grab?
Well, near term, the next earnings report, probably late July or early August, that'll be the next big data point on profitability and growth.
See if the trend continues.
Precisely. Then there's M&A. They just bought Eastern Grocer in March and Nam24 in Cambodia back in January. So will they keep acquiring smaller players? That could be a factor.
Okay.
On the risk side, regulatory scrutiny is a big one,
Yeah.
particularly around gig worker policies, benefits, status, that kind of thing. That's heating up across Southeast Asia.
The gig economy regulations, always a factor.
Always. And currency fluctuations, too. You see that 16% GMV growth? It was actually 17% in constant currency. So FX can impact the reported numbers.
Right. Something to keep in mind when looking at the headline figures. You mentioned some specific metrics from the due diligence report. Can we dive into those?
We can. Beyond the financial services growth we discussed, Seeking Alpha had an estimate for Grab's full year 2025 EBITDA at around $888 million.
Yeah. An estimate, but gives a sense of scale.
And their trailing 12-month adjusted free cash flow was reported at $157 million. So generating some free cash, which is positive.
But it feels like some common valuation metrics are missing from these recent reports. Things like PE ratio.
You're right. Key metrics like earnings per share, price to earnings, debt to equity, return on equity, they weren't disclosed in the Q1 release or the summaries we have. Same for price to book. Dividend yield, which is 0, they don't pay 1, and beta, their stock volatility measure.
So for those, you'd need to dig deeper, maybe into SEC filings or data platforms?
Exactly. You'd need to consult those primary sources or financial data aggregators for a more complete valuation picture.
Okay. Let's zoom out a bit from just the financials. What are the broader business trends and industry factors affecting Grab?
Well, a key factor is their established dominance, particularly in ride-hailing and food delivery in many Southeast Asian markets. They built a really strong network effect there, especially pre-pandemic.
That network effect is hard to replicate.
Very hard. And we're seeing growth and, maybe more importantly, synergies developing between their core businesses and the newer segments like financial services and advertising.
So they leverage the delivery mobility users for fintech.
That seems to be the strategy. So they're a leader in mobility and delivery, but perhaps more of a challenger, albeit a fast-growing one, in fintech.
And they have the partners to support this, drivers, merchants.
Yes, the Q1 report mentioned record high numbers of active driver and merchant partners. That's crucial for the supply side of their marketplace.
And industry trends, what's happening around them?
Yeah, we mentioned the regulatory focus on gig workers. That's huge. Also, the use of AI for things like road optimization is becoming standard. And the whole embedded finance trend, integrating financial services directly into other platforms, Grab, is right in the middle of that.
Makes sense. You also mentioned some recent changes to their board of directors. Does that tell us anything? New people coming in?
Yeah, there were a few changes announced. Stephen Tishman, Peter Oey, and Cheryl Goh joined the board. Ong Chin Yin and David Lowe stepped down.
Do the backgrounds of the new directors give any clues? Suggest any shift in strategy?
That's an insightful way to look at it. Tishman has a strong tech and digital media background. Oey brings deep finance and investment experience. Go is known for marketing and branding in the digital space, particularly from her time growing Grab's brand.
So tech, finance, marketing.
It could signal a focus on, strengthening those areas, tech platform, financial discipline, brand building as they push towards sustained growth and profitability. Seems logical.
Any insider trading activity reported after these Q1 results?
The sources didn't mention any significant insider buying or selling immediately following the report, but of course, you'd want to monitor SEC Form 4 filings for any updates there.
Always good practice. Okay, finally, let's try to wrap our heads around valuation and risk, acknowledging those data gaps we talked about.
Right. With price to book missing, we can only really note that tech peers sometimes trade in the, say, 4x to 6x range, but that's just a rough benchmark.
And no dividend, as you said.
Correct. No dividend yield. And beta, while unreported, is probably greater than 1, meaning the stock likely moves more volatilely than the overall market, which isn't unusual for a high-growth tech name.
And the key risks to summarize.
I'd say two main ones stand out from the filings. First, can they maintain profitability? It seems dependent on keeping costs under control while still competing fiercely. Second, regulatory risks, especially around digital payments and financial services in Southeast Asia, remain a significant factor.
Okay. So putting it all together, what has actually been moving the stock price recently? What are the main drivers investors seem to be reacting to?
It really seems to be the positive reaction to that strong Q1 earnings report.
The profitability headline?
Exactly. Showing that progress towards profit plus the continued strong user growth, that combination seems to have resonated well.
Makes sense.
Also, the strategic updates, like the board expansion we discussed, might have added a bit to investor confidence, showing they're bringing in relevant expertise.
And for listeners wanting the latest price chart or more detailed financials.
Yeah, for the nitty-gritty stock data, your best bet is always platforms like Yahoo Finance or going directly to Grab's own investor relations website.
Got it. Any major news in just the last day or two?
Not really anything significant beyond the Q1 results and those board updates being digested by the market. The focus is still very much on that last earnings release.
Okay, so to kind of bring this all together, we've seen that Grab's latest reports, particularly Q1 2025, paint a picture of a company making pretty significant strides towards profitability.
Right, while still managing to maintain strong growth across its different services, rides, food, financial services, etc.
The improving financials, that positive analyst sentiment following the results, it's all quite encouraging, isn't it?
It certainly looks that way on the surface, but, and it's an important but, you absolutely need to keep a close eye on that competitive landscape we talked about.
Go to Food Panda.
Exactly. And any new regulatory shifts in Southeast Asia. And, crucially, can Grab sustain these positive financial trends quarter after quarter? That's the real test.
Absolutely. Well, we hope this discussion has given you a clearer perspective on Grab holdings.
Yeah, hopefully a good starting point for your own thinking.
Remember to subscribe, like, and comment if you found this analysis helpful. Let us know if you want us to look into other companies, too.
We'd love to hear from you. What questions do you still have about Grab? Or what other stocks are on your radar right now?
Let us know. Thanks for tuning in.